Hello guys, it's Max here from Daily Market Movements, and in front of me we have the Nasdaq 100 futures chart. Now, as you can see in today's trading session, it's been rather volatile. We were trading down 1% just after the US markets open, but since then we've paired our losses and we're now trading in the green. Currently find ourselves trading just below that 12,700 area at 12,686. Yesterday we had our first daily close below 12,750, which of course was that key level. I said, if we get that daily close below 12,750, we are likely to go low, and that's exactly what happened during today's trading session. We did have a session low all the way down at 12,500. Now 12,500 is a very interesting area. It offers a large psychological presence. If 12,500 was to be broken, we would then very likely go down towards the 12,000 area and potentially even a 200-day EMA, which is at 11,800. So 12,500 really has to hold, especially if you're a bull in this market. You do not want to get a daily close below 12,500. Also, I've drew another second red line here. That's where we found plenty of resistance in previous trading sessions dating back to September to November. That could now act as the new floor in the market. We did briefly target that 12,500 area. Sorry, we did briefly tap that 12,500 area, but since then, of course, we've now shot up roughly 200 points. Very, very tricky one to predict here, the Nasdaq. This is what I like to call yo-yo markets. One day you're up 2%, the next day you're down 3%, and then you get that bullish buying signal. It could be a pattern, it could be a fundamental news, and then the next day, that's completely thrown out the window and the market does the complete opposite. So these periods tend to last for about 3 to 4 weeks. We've already had 2.5 weeks, so we could see, a continuation going into next week. So what I like to do, I just like to let the market settle, okay? Eventually you'll get that really bullish candlestick, and then from there you'll see some really good buying activity return to the Nasdaq 100. But this is just down to the fact that yes, interest rates are rising, but I don't really believe that interest rates are going to rise, and I don't think traders think that either, because we've had Powell come out and give us a confirmation that interest rates are here to stay low for quite a long time. But I think that this is just investors simply taking profits on their huge gains from 2020 in some of the big tech names and reinvested it into the reopening trade. So the airlines, the hospitality stocks, they've been trading very, very nicely for the past 2 weeks, especially the airlines. For example, you've got American Airlines, which is up roughly 30 to 40% in the past couple of months, all the way down from $15. It's currently trading at roughly 23. So really, really good movements in some of the value stocks as well as the financials. You've got JP Morgan, which is trading at all-time high now, above 150. So they've had a really nice bounce here. Tomorrow is a huge day for the markets. Non-farm payroll, non-farm payroll is normally a massive occasion, but I think this time around it's even bigger, because Powell said as one of his main factors as to why the Fed aren't even thinking of lowering interest rates is due to the fact the unemployment figure is still very, very weak and bad in the US. And of course we have the non-farm payroll number. So if the number comes up and it's smashed expectations, it's a lot better than what analysts were anticipating, that could have a very negative effect on the financial market, so on the stock market. So the Nasdaq 100 could continue to decline if we have a very positive number tomorrow. But on the flip side, if we have a worse than expected number, that could be very supportive, and that could send the 10-year yields a lot lower, which of course will then have a positive effect on the stock market. So all eyes are on tomorrow with the non-farm payroll figure. But I am bullish here. I don't sell indices. Yes, we had a selling signal yesterday with that daily close below 12,750. I will say it again, I do not sell US indices. As Warren Buffett stated this weekend with his annual letter, never bet against America, and that's exactly what I don't do. What I simply do, I just wait for a fantastic dip to occur, which we've seen over the past week or so. Have I lost money on the downside? Of course I have. I've been like most traders, buying the dips. When we fell 5%, I bought when we had that bullish candlestick, which was that hammer a few weeks ago at that 50-day EMA. I put some money to work, and yes, I've lost quite a lot of money over the past couple of weeks. But I also realize that there's a significant amount of value out there right now. You have the likes of Apple, which is 20% below its all-time high. You have the likes of Nvidia trading $100 off its all-time high. Neo has fallen 40%. Tesla's down roughly 20 or 30%. So there's some fantastic buying opportunities out there, and I am more than certain that a lot of these stocks will bounce back up towards their all-time highs within the next 6 to 12 months. So I really see this as a buying opportunity. If you have been waiting on the sideline and you did expect this dip to occur, well then fantastic. Right now is the perfect time to put your money to work. But I am very, very, very excited to see what the future holds here, not just for the tech stocks, but also for the value stocks. But I am bullish overall. I'm not entering the market just yet. I'm waiting for it to settle, as I mentioned in yesterday's video. Hopefully it will do so within the next week or so, and that's when I will really start to put some money to work.